Good morning and welcome everyone to Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. In Equities may take a breather from previous two sessions of losses. If Nifty suggests a flat start, albeit with a bit of positive bias coming in for Indian equity markets, whether the 19,400 mark will be held on to remains to be seen. US tech stocks overseas ended higher a day after a sell-off. Latest economic data showed US private payrolls increased less than expected in September. However, Friday's job data report is the week's key economic data that would be eyed. Talk about Asian shares, they've come off 11 months low as treasuries rally, while Asian shares have rebounded from the lows as the plunge in oil prices and softer US labor data has pulled treasury yields off 16-year peaks. Let's talk about FIIs. They've offloaded shares worth around 4,424 crore. That's a big number. DIIs on the other side, they've purchased to an extent of 1,769 crore. In terms of what we have for F&O ban, the NSE has added in Delta Corp, Manappuram Finance and Indiabulls Housing Finance to its F&O ban list for October 5th. But let's discuss the trade setup, strategies for the day along with few stock recommendation from Chandan Taparia, Senior Vice President, Head Derivative and Technical Research at Motilal Oswal. Morning there.
Good morning, Nickey. Thanks for having me.
Pleasure is all ours. Chandan, let's start off with your strategy for the day for Nifty and Bank Nifty and also your view on HDFC Bank.
Okay, so first, when we talk about Nifty, the index was slightly falling down, hovering near to its 50-day exponential moving average from last 4 or 5 days. Global indices were down in last couple of days, rising bond yield, crude prices, FI's long-short ratio has gone to 20-22%. So these are the couple of things because of that market was drifting lower. But at the same time, we have multiple support near to 19,320, 19,220 zone. So this cluster could provide as a major support for the market. But today we are opening positive in line with the recovery in the global market. But we need to look whether it holds above 19,650 or not. So as of now, 19,300 to 19,650 is going to be the probable trading range for the index for next two trading sessions.
All right, that's the word coming in. Perhaps a bit of recovery that we are expecting for the markets overall, essentially led by financials. Bajaj Finance and HDFC Bank, Chandan. What are the charts suggesting? Do you suggest a buy at this level, given the performance?
First talking about HDFC Bank, this stock has negated its lower top, lower bottom formation after 12-13 days. Even on last trading session, we formed a strong bullish candle, and that was the reason that why Nifty and Bank Nifty managed to recover from the lows. So we have major support near to 1,500 in HDFC Bank, and with support of 1,500, it can was bounce to 1,580 to 1,600 zone. Talking about Bajaj Finance, this stock is finding some stability. Quarterly number were positive comparatively, and support is shifting higher. So we believe that with support near to 77.50, it has potential to rally to us 8,200 levels.
All right, that's the word coming in. Perhaps a bit of help that might come through from the financials to bear in mind the fact HDFC Bank is the stock in focus, but Bajaj Finance is going to be meeting in, the board is going to be meeting in on October 1st to consider in $1 billion of fundraise. Essentially, back in September, it was decided that this is going to be a fundraising which will either take place through QIP or preferential issue of shares. Now, the company has stated that it plans to raise funds subject to regulatory and shareholders' approval. Furthermore, the trading window for purchasing and selling its shares will be closed from September 22 to October 7th. Inclusive, earlier in September, do bear in mind the fact the company had raised in around 1,195 crore by issuing in 7.85% per annum secured redeemable non-convertible debentures, essentially NCDs. Also, apart from that, I believe HDFC Bank will be in focus. Clearly could be the stock of the day. Major dropping that is coming into the counter, perhaps some amount of relief that has crept in. FII suggests more headroom buying. CLSA has added that particular bank overall in the core focus. That's the word coming in for HDFC Bank. But before that, let's actually also talk about Marico. and the updates that has come to, it's a mixed bag of sorts coming in for the company. The Q2 domestic volumes has grown in low single digits for year-on-year basis. That's the Q2 updates. International business delivered a double-digit constant currency growth, and the company now expects solid gross margin expansion, healthy operating margin expansion, and a low-digit operating profit growth. So that's the word coming in perhaps for Marico. That's the stock that we are looking at right now. Remains to be seen how does that fare in the trade. But let's actually also look at how HDFC Bank perhaps is doing. It is the stock of the day. CLSA has added in HDFC Bank to their focus portfolio. Talks about significant cool-off in the relative valuations to the bank, which makes it appear attractive as compared to the peers, given the slight cool-off on account of the valuation. It has further raised an overweight rating overall for all the banks. You might just see participation coming in from banks, which might lead to a solid performance coming in for Indian equity markets. But that's the thing that we need to watch out for. CLSA has also liked in energy, but has remained underweight on IT and consumption story. 11th onwards, you'll see earnings trickling in from the IT basket right now. And also we have another development which has come through for HDFC Bank. Foreign institutional investors currently hold 59% stake in HDFC Bank, which leaves a headroom of about 20% for HDFC Bank. That's the word coming in from Nuvama Institutional Equities, which has analyzed the bank's September quarter shareholding pattern. It suggests that there is still some way to go before the stock's weight can double on MSCI index. The headroom is up from 18.3% in June 2023, when FIIs held 60.3%. It added. That's the word. Also, we have an initiation report for Berstein on DVSL. We're going to be addressing that in just a bit. But I wanted to talk essentially about financials before we could head straight into the market open. It is a session where finally green tick is seen in the markets, 19,500 mark, holding above that level with gains to an extent of 0.4% for Indian equity markets. Clearly, it is a good start coming in for Nifty 50 at this time. Well, also let's look at Bank Nifty just to see where the participation is essentially coming in from. Bank Nifty, well, we are looking at gains nearly to an extent of 0.5%, 44,170, way above that mark. Do bear in mind the fact that the Bank Nifty had slid below that 44,000 mark in previous session, but today it is holding on actually way above that level, 44,150, about that crucial psychological mark level coming in for Bank Nifty. Let's also look at HDFC Bank and Bajaj Finance before we could go to mid-cap and the small cap index, just to see if there is some amount of participation coming in from HDFC Bank, which has perhaps seen sharper cut after the amalgamation that took place with HDFC in July. It is up in trade to an extent of more than 0.75% of gains clocked in on HDFC Bank. Also, let's talk about Bajaj Finance, which has managed to raise in or would be raising in $1 billion of funds through QIP or preferential issue. That remains to be seen. Right now, it's doing well in trade, up and about with gains of more than 0.5% out there. Mid-cap and the small cap index. Let's talk about that just to see if there is some amount of outperformance which has come through from the mid-cap basket overall. Well, gains to an extent of 0.75%, perhaps a bit of outperformance coming in from the mid-cap index. Also, let's talk about the small cap index just to see if the trend has been adding up or just going in the way the broader indices have been performing. It is an outperformance coming in from small cap index too, and gains now closely nearing to a percent mark for that small cap basket right now. Let's also talk about IT index. How is that stacking up ahead of the earnings season? Well, we are looking at gains, some amount of momentum which is built in clearly for IT index. Also remains to be seen how PSU banking index is doing, faring as compared to what a Bank Nifty is looking like. Just to see if there is traction building up. There is an outperformance by a significant amount coming in for the PSU banks. No surprise for guessing their Q2 updates have been rather encouraging for PSU banks. Pharma is doing well. We're looking at gains for the defensive space. Also, let's talk about FMCG. Well, that's a bit which is not participating right now in the uptrend that is usually seen in the market in early deals. It is a flat start coming in for FMCG basket right now. Auto is in top gear, gains to an extent of 0.5% for auto basket. And also let's talk about something in the likes of metal. A slew of upgrades. Bear in mind the fact it's come in for metal basket in September, and the index rather it continues to do well. Let's also talk about realty index. Gains to an extent, perhaps a bit of outperformance which has come in for realty index, 1% of gains clocked in by the index. Let's also talk about the top gainers and the top losers that we have on the list, just to see where the momentum is shaping up for you. BPCL, Asian Paints and TCS. These are some of the top gainers that we have on the screen right now. Apart from that, let's also look at the other top gainers. Hero MotoCorp, Tata Motors and Tech Mahindra. So it's a mix of essentially auto names which are doing well, apart with IT. Infosys, Adani Ports and HDFC Bank. Like I suggested, that perhaps the opening would be lifted in by financials, and no surprise for guessing there, it is the theme of the day. Let's also look at the top losers that we have on the list right now. Divi's Lab, where perhaps an initiation report has come in. We're going to be talking about that in just a bit. Nestle India, Power Grid. These are some of the top losers that we have on the screen early in morning. Britannia, Bharti Airtel and Axis Bank. These are some of the other top losers. Well, there's a Berstein report on Divi's Lab, which has initiated an underperformed rating on the counter, and the target price has been kept at 3,000 rupees, 3,064 rupees. It talks about the slower growth in the later stages of CDMO. Its shifting mix is less attractive as compared to other generic companies. The growth profile, which right now is not supportive of the premium valuation, which trades at a significant premium as compared to its counterparts. That's the word coming in for Divi's Lab, and the stock right now is down and out in trade with losses to an extent of 1%. Let's go back to Chandan and check with him what does he make out of metal names right now, which have been doing well in trade. A couple of upgrades that have come through in the month of September for most of the metal names, mainly Ferris, JSW Steel, Tata Steel for that matter. Also Hindalco. How is he reading into it, and what's his top pick within the metal basket?
So frankly speaking, metal stocks got stuck in a range, so not liking much. But here's the way global market has recovered, and Hindalco is respecting to support of 466 or 465. We'll use that support. So as of now, the range for Hindalco is 465 to 495. We will play this range. So overall, if you compare the couple of metal counter, then Hindalco will be the preferred bet. And with support of 465, one can look for an upside move to us 495 in the counter.
Chandan, let's also talk about Marico, right? There are a couple of updates, Q2 updates that have come in. At least on the financials, it looks like a steady performance coming in for Marico, at least in the month of, for the quarter, September ended quarter. How are the charts looking like right now?
Yeah, some sort of breakdown is visible in the counter. 2 days back, it was trying to give the breakout, but that was the failure, and stock is surrender is gain. So I believe some more profit booking could be seen, which can take it to 535 levels on the downside.
Perhaps the stock is right now down and out in trade with losses to an extent of nearing 4%. It is a mixed commentary of sorts coming in from Marico, where they're expecting a low-digit single volume growth. That's the one which has perhaps gotten on to the sentiment of the markets, especially for Marico. But let's also talk about Nestle, which is going to be considering in a stock split on October 19 along with that of results. It is a split which has come in. The face value is of rupees 10 per share. And Nestle India right now is the stock which is down and out in trade, perhaps one of the top losers that we have on the Nifty 50 index. Chandan, pain on this one. How are you looking at it? Do you think it's an attractive opportunity? And also your top two recommendations.
Yeah, so first talking about Nestle or Nelco, again, range bound bias is clearly visible. 92 is the support. With support of 92, this stock can go to 100 level. Now looking at the recommendations, first trade will be buy on Escort. We are positive on the selective auto counter, and Escort is one of the preferred name. So with support near to 31.45, one can see a move towards 33.40 kind of level. We like a couple of IT names, so including Bsoft or Emphasis. We like Bsoft. One can buy with support of 485, stock can head towards 525 level. So Bsoft, Escorts, and then IRCTC with support of 700 can go to 735. So these are the couple of names which will be in focus and finding strength in this market.
All right, that's the word coming in. Perhaps a bit of drubbing which has come through for Marico. Let's actually replay what the news typically is for that counter. Just to read in, if we are looking at some amount of losses that have crept through Marico, clearly it is a stock that one needs to be watching out for. But we're going to go back to Chandan and talk about Suzlon Energy, which is perhaps touched in a 9-year high in previous session of trade. A bit of positive which added to the list for perhaps Suzlon right now. Does he still think that the stock looks attractive at this level and the investors can lap up the equity at this level?
So we don't have coverage, but technically the stock is doing well. Even from last couple of weeks, we are talking about the same on technical point of view. It is given a breakout and continuously making a high top, high bottom formation. So now the support is shifting to 26 and this rally can extend to 34, 35 level in the counter.
All right. Apart from that, Chandan, what's your assessment on Vedanta? That is a stock which perhaps was doing well after the news suggested of the demerger. Perhaps it went down well with most of the retail investor community, if not for FIIs and DIIs, which have been constantly selling off Vedanta for the last 2 years. But from charts perspective, do you like that counter?
No, I don't like the counter. The structure is weak. Every small bounce is being sold. So till it doesn't go and hold beyond 238, 240, I'll avoid. As of now, let it be, let it find stability, then only we can comment and think about buying and looking for bottom fishing.
All right, Chandan, we'll leave it at that. And thank you so much for taking out the time and speaking to us this morning. All right, the next guest that we have perhaps to talk about fundamental is Vikas Khemani, who joins us early in morning to talk about FII trend, essentially the financials, the GST notices perhaps that most of these large cap companies have been getting, and the theme perhaps for World Cap, which commences today. So that's the word perhaps that we'd want to know from Vikas. Morning there.
Good morning.
All right, your assessment first on financials. HDFC Bank, where CLSA has added the bank to their core focus right now. There's more room for FIIs. Your assessment on HDFC Bank versus some of the PSU bank names, what do you like?
I don't want to comment on a stock specific thing, but generally speaking, we like at this point in time PSU basket over private sector bank because we think that there's a huge risk reward possible available right now, given the transformation which is happening in the PSU bank space. And they are trading very, very cheap, and the earnings growth over the next couple of years looks very robust. So from a risk perspective, I mean, HDFC Bank or most private banks are good banks. But I think just from a risk reward perspective, we think that private banks, public sector banks would outperform over the next 1 to 2 years.
Okay. Also, that's pretty much it in terms of the financials. If you were to compare between banks and NBFC for that matter, do you think accelerated growth now coming in for NBFCs, given the kind of compressions that we've seen for banks in Q1, do you expect the same trend to continue for Q2? And going by that logic, do you think NBFCs are better placed?
Again, I think one has to decide based on the risk profile, which segment to play. Of course, bank as a segment is far more better placed than NBFC, but there are niche NBFCs which are doing very good job, and they would also do as well, very well. So in NBFC, what our preference is always to invest into NBFC where the liability side is very good, generally AAA kind of rating, and their risk profile or asset side risk profile is better. So those are the kind of NBFCs we do prefer. We avoid smaller NBFCs where the liability can be at risk, or we avoid NBFCs which are kind of getting into risky lending. So generally speaking, within NBFC space, we kind of prefer those kind of NBFCs.
Would you want to name few? Because would you want to name a few which look healthy fundamentally?
I mean, I can tell you from some of we have a very large holding in our portfolio of Aditya Birla Capital, which we think is very well placed at this point in time, given the risk reward in their favor. And other NBFC which we have, where again the ownership and which is under transformation is Indostar. These are the only two NBFCs we have. Both are owned by very, very strong parentage, and both are in some sense in a process of transformation or getting put on an accelerated journey. So we think both are in a very good space from a 3 to 5 year perspective and can generate better return than banking sector.
All right, Vikas, what's your view on IT sector specifically? The stocks have been doing well. Perhaps, do you expect weakness creeping in even on for the September quarter for IT stocks? What's your assessment?
We've been continuing to remain bullish on IT sector for quite some time, even when the entire market was writing them off. This year, most IT stocks have done well for us, and we prefer more, fast-growing mid-space IT space rather than some of the large companies. And we've been finding good ideas in that, and most of the IT stocks, have delivered 50-60% returns for us in last, 8-9 months. We think that there's a good space there. It will continue to do well. Once US rate starts coming down, that will be even another accelerated growth phase for IT services, which is again, so you have a defensive sector with a good long-term growth drivers in place. So we remain invested in the entire IT space.
So within the space, what do you like? Do you like mid-cap more as compared to perhaps the frontline, the larger caps? So what's your preference?
Yeah, so just like I said that, we more prefer mid and small cap in that space, but within large caps also there will be, again, from a risk reward stability risk perspective, some of the large names are also offering very interesting, sort of we own in our portfolio, LTTS, LTI, HCL Tech, in some of the larger names where we think that valuation again is in favor. So again, whenever you evaluate company, one is the sectoral tailwind or sectoral growth thing, but within that, then you go and look for the companies which can deliver better risk-adjusted return, given their interplay between the growth and the valuation. And that's how we always kind of try to book stocks.
Sure. Let's also deviate our conversation a little bit towards the metal space right now, given this China stimulus theme that has been the growth story. Apart from that, the infra theme, which has been a push for most of the steel players. In the month of September, we've seen a couple of upgrades coming in for most of these names by a couple of brokerages. How are you viewing metal stocks? Anything that you like within the space, given ferrous and non-ferrous?
We generally don't have any exposure towards metal space. But given the fact that there is an investment cycle which is picking up across the globe, of course, China might be slowing down, but in developed world also investment cycle is picking up. So the space should remain reasonably all right. But commodity prices can be volatile, and hence we generally avoid a lot of exposure to the space.
All right, that's perhaps the word coming in. Apart from that, anything specific that you like as a theme ahead in the election year, or for that matter, in the run-up to the upcoming earnings season?
I think pharma as a theme would be, in my opinion, next 5-7 years, another big emerging space where you could make significantly risk-adjusted returns. And, last 10 years, if you see, pharma as a segment has not delivered any meaningful return. But going forward, I think there's a lot of change happening in the regulatory space that could be a good tailwind for the sector as a whole.
All right. Okay, just a little more aerial perspective there. Perhaps RBI monetary policy meeting, which is going to be outcome, which has finally come out tomorrow. What are your expectations from the outcome from RBI? That's one. And also, does that change anything for you in the event if we see a rate hike which is perhaps delivered? How are you looking at it, and the themes that, apart from backs, that will be in focus for you?
Given the rate hike, which is hardening over the yields in US, and a little bit of a worry around the inflation side, both on the crude as well as food inflation in India as well, RBI would be cautious in terms of probably I would say that they would be sounding cautious in their commentary. But I don't think there's a situation where RBI would like to increase rates at this point in time. If it increases the rates, in my opinion, there could be a little bit of sentimental impact on the markets, but I don't think it will change the trajectory of the market. But I don't envisage RBI increasing rates at this point in time. They will sound cautious, wait and watch kind of approach, more data driven. And currently there's no case for rising interest rates in India. I think in India, inflation has been managed very, very well with a great coordination between government as well as RBI.
All right, Vikas, we're just going to leave it at that. And thank you so much for taking out the time and speaking to us.
Pleasure.
Right, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.